Okay, so we talked about us having two types of market structure. The basic market structure, which is this one I
And
just drew, and we have an advanced market structure. Now, in the market makers should not make it too easy for you and I. Because if everyone is just doing this up, down, up, down, up, down, up, down like that, everybody will be a millionaire, right?
sure.
Sure, it will be too easy. Oh, swing level. Once markets do like this, once the market do like this, something like this. Oh, it's time for me to buy. Oh, once market come here. Oh, once market break out and come back. Oh, it's time for me to buy. Oh. Once it break out, come here. Oh, it's time for me to buy. It's not that you can't see it in the market. Oh. Yes, you see it. But in many of the cases, this is too basic. That's why it is called basic market structure. Now, as you go on, you see the market does not just price action does not just move like this straight, like textbook pattern. I don't know if you've observed it. It won't just move linear, or I won't say linear,
Yeah,
or perfect like this, like textbook version. You see some kind of variation. Now that is where advanced market structure comes in to help us out. We call it the AMS, Advanced Market Structure. Now I'm going to teach you how to spot advanced market structure and the rules concerning the advanced market structure. Now these rules must be followed. I repeat, these rules must be followed. If the rules are not there and what I teach are not there, please, it is not an AMS, it's not an advanced market structure. We have the BMS, the basic market structure. We have the AMS, advanced market
you're
structure.
cracking.
Like as I was saying, market is not going to give you something as basic as this all the time. Now let's go to the currency pairs. Let me show you something. Now, oh, market has even opened. All right. So let's go to odd CHF. Now in odd CHF we can see now the more of the time that this basic market structure plays out is on higher time frames. Now you see them on higher time frames. Now you want to be catching trades where you use little lot sizes. Now let me show you something on odd CHF. Let's see an advanced basic market structure. Now this is a typical basic market structure on odd CHF. This is a bearish trend. We have a low, we have a high, we have a low, we have a high, we have a low, we have a high, and we have a low. Now, this is basic, right?
Yeah,
This is perfect. But now you can't, this is a weekly time frame. But now you can't take trades on the weekly time frame. You have to scale lower. And once you scale lower, all this thing you're seeing clear like this is going to be more more confusing, more complicating. That is why we have the advanced market structure. That when that comes in. Now, not that if you don't see the advanced market, if not that if you don't see the advanced market setup, you can't take a trade. You can see the basic market setup and go ahead. But the advanced market structure has, let's say, a 90% win rate when used properly. All right, so let's move on. Let's sorry about that. Let's look at what advanced market structure is. Now, hope you have your pen and paper.
yeah,
Perfect. Now, after this class, I want you to go and look for the advanced market setups. Well, let's move ahead. Now, In an advanced market structure, this is what it looks like. We have a low, we have a high. Just observe. We have a low, we have a high. We now have another low. Let's say somewhere here, and another high, and this. Now, observe the difference between this and this. This is the basic market structure. This is now I'm going to be using EMS, AMS, and BMS. Advanced market structure, basic market structure. Okay. Hope that's
Okay.
okay. All
Yeah,
right.
sure. Sure.
So this AMS and this BMS. Okay. So we have an AMS here. We have a BMS here. Can you see the difference?
Yeah,
See how basic this one is. You see how this one wants to look as if it's complicated, right?
sure.
So I'm going to teach you. Let's move on. Let me delete this. All right, so let's move on. So this is what an advanced market structure looks like. So now let me explain what all this move means. Now, this is a high. Market came down, it went back up and what? Took out this previous high. This is what we call a sweep of liquidity. All right, so this is what we call a sweep of liquidity. Now, when markets broke this high, what did it do? I hope you are with your pen and paper.
Sure.
It formed what we call a break of structure. Now, price came down, it went back up, took out this high, it swept liquidity. So all the people that were selling from here, it came and took all of them out and came back down, broke this what? Broke this level here. This is what we call a break of structure. Now, when it broke this level, it retraced again. It retraced, let's say, about 60 to 50%. Then when it retraced again, it still came back and broke this structure here, broke this level. Another break of what? Structure.
Sure.
So when it broke this structure here, it went down. And what happened? It came back up again and swept everybody out here. And then what? Sold off. This is what an advanced market structure looks like. Now let's go to chart and see it. All right. So what was the first thing I talked about? A sweep of liquidity, right?
Yeah.
All right. So this was a high. This is a high. This is a trade we are supposed to be in now, but I missed it. So, but I think it's coming back to entry. Let's wait and see. All right. So this is a high. This is a high, right? This
Yeah.
is
Hello.
a low. Market came and took out that high, right?
Yeah.
Market broke structure, right?
Yes.
Market retraced 50%, right?
Yeah.
And market sold off, right? Gave a second break, right?
Yeah.
Now market came back again to that place, right?
Yeah.
And we're supposed to sell off to this place. Do you see it?
Yeah. So
It's like a cheat code. Now can you see the comparison between this guy and this guy? Can you see it? This is an advanced
yeah.
market structure. Now, do you see the basic market structure inside here? No, right?
Um,
There's no basic market structure here, right? See how everything is looking ugly,
yeah.
a bit ugly. But now with the advanced market structure, cases where you don't see basic market structure, the advanced market structure comes in and gives you opportunity to what?
typical
for
trade.
trade. All right, let me show you another example. Let's go to currency. You can use this anywhere. Now let's look at okay, how they trade on Euro AUD. Let's Euro AUD EE. The trade just hit TP. All right, so let's look at EA. Let's look at the 4 hour time frame. All right, so EA was looking all messy. Do you see how EA is? Do you see how it was doing? It was just doing anyhow. Do you see any basic market structure here? No, right?
No, no, no.
All right, so let's see if we can see an advanced market structure. Let's go to the daily time frame. Okay, let's use daily time frame. Or should we use the let's use 4 hour. Let's use the 4 hour time frame so that it will be a bit clearer. All right.
No.
So let's oh yeah,
I
let's
did
let's
class.
draw together. Are you with me?
Yeah, I did with
All
you.
right. So we had a high, right? Market sold. Maybe there have been some early sellers here, right? So now we had another market took out this high, right? Took out all those people that have been selling, right?
Yeah,
Took out this previous high, right? Just like I said in the advanced market structure, we had a high, market sold off, took out this place, sweep of liquidity. Now, after market took out all these guys, it came back down, right?
yeah,
The market went back up about 60% of the move. Abi?
yeah.
Then we had a second break here. And then price went back up to this place, right?
Yeah.
Tapped us in, and then boom, straight to TP. Do you
Hmm.
see how it is?
Yes, sir.
Do you
Very
see
good.
how it's like a cheat code? Let me go to the daily time frame so you see. So it's like a cheat code. So this is what I've been trying to teach so that everybody will be present when I'm teaching it, but I can't be postponing it because anyone that's available, I'll just take the person and move on. All right, so you see we had a high, market came down, broke above it, broke structure here. Then when market broke structure, it retraced again 50%. When market retraced again 50%, still broke again. Went back to this place and then straight to TP.
Hmm. Take profit.
All right. So let me outline the rules of the advanced market structure for you. Is your hand raised? You wanted to say something?
Yeah. Like see, I've seen it in this market structure. Now I wanted to ask this question in the last one you drawed, but it's okay now. I think I understand now.
Okay, perfect. All right, so let me outline the rules for you. So, number one rule, let me put it in caps lock self. There must be a sweep of liquidity. This is number one rule. Number one, if there's no sweep of liquidity, it is not an advanced market structure. Market must come to take out a previous high. It is a must. If market does not take out the previous high, there's nothing I'm coming to look for an AMS here. Market must take out the previous high. Okay, market has taken out the previous high. What is the next rule? There must be a break of structure. Number two rule. Number two, there must be a break of structure. Okay. So now remember number one rule. There must be a sweep of liquidity. That means
Yeah.
market must come back to take a previous high. Look at this example here. Market must come back to take out the previous high. Now, number two, there must be a break of structure. That after market has taken out this high, it must come to break at that low that gave birth to the high that took out this previous high. So market must break it. It is a must.
Okay.
So after market break it, what? There must be at least number three rule. Number three. There must be at least a 50% retracement. Yes, your hand is up.
Yeah, the 50% retracement. How do you know that? Like, do you know that with looking at the structure? Like,
Okay. So let's look at something. Now 50% is half, right?
yeah, that's
Okay, look at this move. This should be half of this now. This retracement here should be half of this whole move, right?
yeah, but in the way it is here, it should be half. Yeah.
Exactly, perfect. And still, you can still use your Fibonacci tool. I'm going to still teach you how to use a Fibonacci tool. So I'm going to use my Fibonacci tool now to draw it. Swing high to swing low. You can see the green line is the 50%. The red line is the 60%. The orange line here is the 30%. So you see, you had a 50, we even have up to a 60%. And it is more sweeter if you have a 60% retracement. But it must at least be a 50%, at least be a 50% retracement.
Okay.
Perfect. All right. So you see this trade now, it has met, we've done number one rule, a sweep of liquidity. We had a sweep of liquidity here.
Mhm.
Market took out the what? The previous high. What did it do next? It broke
It
structure.
breaks. Oh,
Exactly. Break that low that gave birth to the high that took out this high. This low, it has to break it because it's this low that gave birth to this high that took out
okay.
all this liquidity here. All right, so now we have our first row and second row. So now there must be a what? A 50% retracement, which is this. Now, one more row. After the 50% retracement, there must be a second break of structure. Number four, there must be a second break of structure. Now this is it. We have a number one rule. Market took out what's high here, sweep of liquidity. Number two rule, we had a break of structure here. Number three, 50% what? Retracement, at least, positive possible 60% or more. Then after that, what? Another second what? Break of
Great.
structure. So we have one break, two break. And then what? We waited for what? Price to come back to this point here, our 50% retracement. So let's just say we waited for price to come back to our B. So let's say this is our A. This is our point A. Sorry. So let's say this is our point A here. This is A. This is our point B. This is B. And this is our point C here. So you can see we have our point A, point B, and point C. Now, when market give us a second break, price must come back to what? Our point B, within our point B, and then what? It's going to either sell off or buy off. So now this is an example in for a sell move. Let me show you. Let me draw a buy move. So we have our move, right? We have our move, right? What's the next move that's supposed to happen?
A lower low, something like
Price must come out to take out this low, right?
that. Yeah.
Then what's next? Look at the rules there.
Then he has to break.
50% retracement.
After price sweep liquidity, what next?
He has to break structure.
It has to break structure, right? So let's say it has broken structure. It broke this
Okay.
high, high that gave birth to this to, to
Low.
this low. All right. After that, what next?
There must be at least a 50% retracement.
So let's say market retrace to this point. After that, what next?
There must be a second break of structure.
Then after that, what next? Price must come back to what?
Not
To your point B
to be
and then buy off. Let me arrange it well. It is as simple as this. If you are once you train your eyes to see this in the market, you are good to go. Once you train your eyes, once you train your eyes to see both the AMS and the BMS, you are good to go. You've learned the cheat for breaking the financial market. You've been seeing how I've been flipping accounts now. I've been on to
sure.
flip accounts too.
I won't flip more.
Sharp, sharp, sharp. So once you see this in the market, your point A, your point B, and your point C, your take profit is always at your point C level. All right. So, and your stop loss is usually above your point A. So let's say if you are selling something like this, sorry, not this, sell. If you are selling something like this, stop loss will be above here, and then you take profit here. Have you seen? Let's say we
Yeah.
are buying this. The stop loss will be below here, and take profit will be here. So you see how it is. It's not hard. Just follow the rules. A sweep is Dominion here.
Yeah, is there.
All right.
Yes,
So
sir.
Dominion, you always ask me what are the two lines I mark in my chart. This is the
Yes,
first
sir.
line I always mark. I always mark my sweep of liquidity.
Okay.
Once I mark my sweep of liquidity, I go ahead and mark my point B, indicating the area I'm waiting for the market to come back to. Now I'm going to
Okay, sir.
teach you people in future class. I'm going to teach you how to refine entries. If you've noticed, most of the times my entry is not on these lines. It's sometimes usually below because I am trying to flip account. So I need to get the best possible, the best entry. Okay, the best entry as the best sniper entry or the most sniper entry. I don't know which English to use as possible. So you see how I used to have the two line I used to draw my chart. I don't used to draw plenty things on my charts. All right, so we had analyzed the market here. So we can see this typical. We had a sell. Market took out liquidity, sweep of liquidity, took out this high. We had a break of structure, 50% retracement, and then a second break. Now market came back up here and sold off. Definitely, I think from here to here, the lowest lot are supposed to be the lowest of the profits are supposed to be on the lowest lot side should be nothing less than $5. So let's say you have stacked like five positions here. Let's say I stacked like five positions here. This is the 1:3 risk reward ratio. So let's say 5 times 3, that's how many?
5 times 3, that is 15.
15.
15. I think this stop loss was around $2. This stop loss there should be $2. Let me see. Or let's say $3 or so. So $3 to $2. So let's say you've risked like $2 in three position, 2 for 6, that's $6. And you've made $15 at the end of this move. So outrightly, I'm waiting for my entry somewhere here. You know me, I like sniper entries. So if this entry comes back to this place, I'm taking this trade. Let me delete this guy. So this is a live analysis now in a live class. If this entry comes back to here, this whole point here, I'm taking this guy. This is my entry. Taking this guy. And I'm going to, and once I see my confirmation, I'm stacking this guy on top of this place. I'm stacking this guy to the downside once I see my confirmation. All right, so you can see how the AMS, the advanced market structure, works. It's not difficult. It's as simple as that. Once you see it, you can't what unsee it. So okay, let me go to okay, let me open the different tab. I don't want to delete that one yet. All right, so let me show you other examples. Let's go to let's see V 151. There was a trade I took. Okay, look at it. Look at this trade now. Look at this trade. We had a high, right? It sold
Yeah.
off. We had a sweep, right? We had a break of structure, right?
Yeah.
Market retraced 50%, right?
Sure.
Yes, sir.
You had a second break of structure, right?
Yeah.
Market went back up, right? To this area, this whole area here. Went back
Fifty
up to our
percent.
B. Remember, this is our B, right? Remember, this is our B.
Yes, sir.
This is our A. This is our B. This is our C. Market went back up, right? And what happened? Straight to TPRB.
Yes, sir.
So you can see it's as simple as this. You can spot it, and the joy of the AMS, the advanced market structure, is that you can spot it on any time frame, even on the 1 minute time frame, even up to the daily. This trade was taken on the daily time frame. This one, this EA that went straight. You can see no retracement. It was just going. It was just going. No retracement. Market was just going straight to TP. So okay, wisdom, your hand is up.
Yeah. So I just wanted to ask, like, did you just go into a chat and just start analyzing this way, or you take days to look into the market?
All right. So now, remember I taught you, what was the first thing I taught you? Key levels, right?
Yeah. Key levels.
All right. So now okay, let me show you something on BTC USDT. We took a sell here or so. Took a sell here, if I remember. We had a sell here. I think it was here. Yeah, here. And this was our TP smashed. Oh, sorry, this is a buy position. Took a sell. Took a sell here. Took a sell here. And this was our TP here. Smashed our TP. All right. So now let me show you something. All right. So now, remember I said the first thing you do once you come to a chart is to what? Draw your key levels.
Yeah, on a weekly time frame. Not
Exactly.
not
So
nothing more than weekly time frame.
perfect. So once you draw your key levels, okay, you know that, okay, This market overall, it is buying. Now let me explain something real quick. Now you can find AMS anywhere, both buy and sell. It fool the market. But now most of the times your AMS will hit stop loss. Do you know why? You may say
Right.
you can't see an AMS that is selling, and the trend of that market is buying. So definitely there's a 50-50 chance that you are going to hit stop loss. Because if the AMS, maybe probably the AMS plays so much in your direction and probably you didn't take tip, maybe you had the 1:5 and the AMS did 1:2 and you didn't close tip and you see something like the AMS coming back, entry and then hit your stop loss. Probably it's because you are in that trend, the current market trend is bullish and you saw a sell AMS. So you have to put these things into consideration. Now, definitely it's likely to play out though, even if it's a few pips. But now you have to understand that okay, you have a trend. You need to know the current trend and the order flow of the market. So let's say the order flow is a bullish order flow. Market has been trending up. Definitely, if you see a sell AMS, advanced market structure, there's every possibility you're going to hit stop loss. But if you see a buy AMS, you are going to hit TP. Let me show you something on V25. Okay, is still the same V25. Okay, see something on V25. Now this is an AMS, right? Let me show you. We had the low, right?
Yeah.
We had the sweep of liquidity, right? Okay, this is the type 2 setup. So what I just thought is a type 1 setup, but don't worry, I'll teach you a type 2 setup. So let's just assume this is a break, right? Let's just assume this is a break, but this is not a break because it is a type 2 AMS. So let's just assume this is a break, right? We have our B, right? We have our level B here, right?
Yeah.
We have our second break, and this is our level C, right?
Yeah. Why don't you take
Market
the break in?
this break here,
Like like there's a break in this other part here.
this
Than
one
be
here,
stressing together.
here and then here.
Yeah, yeah,
Okay, I'm going to explain why I didn't take it. Why I didn't take this as my B. All right. So we had a break here. We had our type C. After here, second one, and then it came back to our B, right? This is our B, right?
yeah,
And it went to our C, TP. It went to our C, TP. All right.
yeah,
So now, why I didn't take this as my B here is because this is the closest low to my A. So you want to take the closest low to your A. This one between here, between here and here, which one is closer to this low? This one, right?
yeah.
So you
Okay.
want to use the one that is closest to your low, to this your sweep of liquidity. Now we call this place a sweep of liquidity your protected low. And in a sell trend, we call it the protected high. So this is a protected low here. So you need a B that is the closest to your protected low or closest to your protected high. So that's why I didn't take this. Now, even if I took this, market came here and it went up. These are a few pips, right? I'll just eat a small pips and it will still come back because this should have been my valid what? Protected low. Sorry, my valid B here because it's the one that is closest to my protected low. And you can see, Mark, although I missed this trade, this happened on the when was that? This was on the 25th or so. 25th was when? This was 25th was on Thursday. I think on Thursday I was not on seat. So that's why we missed this trade. So this is how you want to be trading. Now let me show you
So
how I got this trade. All right. So I'm going to show you how I got this trade. I'm going to do a clean top-down analysis to explain it for you. All right. So in the derivative, you don't have the weekly time frame on the derivative trading view. So we use our 24 hours to mark our key levels. All right. So this is my key levels. You can see my key levels here. I marked a key level here and I marked a key level here. All right, so I've marked my key level. Now we're bullish, right? We're going up. Okay, this is another key level here. Let me mark it. This is the key level I was using for all this trade. All right, you can see this is a key level. When market broke it couldn't break this one. It came back again, right? You can see a basic market structure here. You can see a basic market structure here. You can see it right and down here.
Yes, sir.
Perfect. So now in this basic market structure, now we have our up, we have our down, we have our up. So what trend is this?
An uptrend.
An uptrend. Perfect. Now I draw my key levels and I saw, oh, this is an uptrend. Perfect. We're going up. We've been buying V25. I don't know if you've been observing. We've been buying V25 until we got here. Now I know this was a stumbling block because this is a key level here. Now what happened? We sold. We're supposed to sell. We're supposed to be in this sell here, but what? It missed us. Now, why did I take this sell? I took this sell because remember I said for every impulse move, there's a correction move, there's a corrective move. It is a must. Impulse, correction, impulse, correction. Now, this sell here was a correction. Now, this correction move was a Fibonacci move, a retracement. Let me pull up my Fib2 and show you. Now you can see it retraced to what? The 60% Fibonacci zone. Now, when price got to the 50% Fibonacci zone, I said, okay, we are due for buys. Let me find buys. Now, I don't want to use the basic market structure on the lower time frame because it's going to look dirty. Now, let me open lower time. Let me open 15-minute time frame. Now, I open 15-minute time frame. Do you see how it's looking? It's looking anyhow. You can see how what market was doing. It's just moving anyhow. See what this one is doing. You can see what it's doing, right?
yeah.
So it's just moving anyhow. Now, in order to filter all this nonsense, because I want to look for a buy, I have to look for what? An AMS in the lower time frame. Now, so you can find AMS on any time frame. Oh. So what I did was, okay, I said, okay, I was going lower. What I do is, okay, I'll start from the 4 hour. Is there an AMS in the 4 hour? No. Okay. I'll move to the 1 hour. Because my eyes is already trained to see it. Once I open a chart, I'll just see it. So I don't have to start searching for it. So I open 4 hours. Is there an AMS? I didn't see it. No. I moved on. I opened 1 hour. Is there an AMS? I didn't see. No. I moved on. I opened 30 minutes. Is there an AMS? Yes, there was an AMS. I said, okay, let me mark it. I marked my protected low. I marked my point B. And this is my point C where I take profit is. So you can see I already plotted this chart since this thing. Since on the 24th. See when the trigger was 25th, the next day. And it went to take profit on the 27th. So you can see how I started from up, right, and came down even to look for an AML. So this is how you want to be analyzing the market step by step. So me, I already know literally the order flow or the trend of almost all the market I'm trading. So I don't need to start drawing key levels or looking for market flow. What I just call is when I come to the market, I look for what? EMS. I don't know if that helps you or that
So you
answers
don't
the
look.
question.
So okay, so you don't look for like normally when you enter into a market, you don't okay. You already have your key levels already plotted out before
I already have
you enter now.
everything plotted. So once I come, I look for an AMS. So even if it's a bearish, even if it's a bullish order flow, and I see a sell AMS, okay, I say, is this thing going to be valid? What was going to, okay, look at something now. Look at something. This is another AMS here, right? As well, this trade
Yeah,
was going to TP. I don't know if you people spotted it. You have to train your eyes. We had a low here, right? We have a
yeah,
sweep here, right?
yeah,
We have a break of structure, right?
yeah,
This is our point B. This is the lowest point to our point A, right?
yeah.
Our point C is up here. Let me reduce it. Our point C is up here. Have you seen it?
Sure.
Yes, sir.
So what you are waiting, I was waiting for price to do is to what? Come here. Come back to what? Point B. Here.
Which is a 60% right of 50 at least.
Yeah, this place here. And then buy to the upside again. And this buy, this time around, nothing is going to stop it. The same way the sell was pumping like this, the buy was going to what? Pump. This is what I was waiting for, but it didn't happen. This trade is still very much valid. I'm still waiting for it until it goes back here or until it forms another AMS. Before what? This trade is going to be what? Invalid. Right now, I'm seeing something that looks like another AMS. Look at it here. This is a low, right? Are you with me?
Yes,
Yeah,
sir.
me too.
Okay, perfect. This is a sweep, right?
Yeah,
This is a break of structure, right?
yeah,
This is the low closest to the lowest low, the lowest place closest to our A, right? So this will be our B. Then this will be our point C or anywhere the market reaches before it comes back here and then to the upside. Let me delete this so I don't be confused with this other one. So you can see it, right? This AMS everywhere. You just have to make sure you spot them accurately and that they are following these rules are listed here. There must be a sweep, there must be a break. Now this rules is for what? The type A. So we have type A AMS. This type
What
A,
is the full meaning of AMS?
advanced market structure.
Okay.
Remember I said we have two types of market structure.
Yes,
Basic
sir.
market structure, that's the BMS, and the AMS, the advanced market structure. Perfect. All right. We are going to I don't want to fill your fill you with a lot of information now so that you can digest the one we've done so far. So we are going to call it a close at this point. But I have an assignment. I want you to go and look for AMS for me. Any time frame, any instrument, anything at all. Look for AMS for me. Look for AMS 5 buys and look for AMS 5 sells. Let me write it down. Assignment. Look for AMS 5 buys and 5 sells. So altogether, I'm expecting a total of 10. So this is the assignment. 5 buys and what? 5 cells. Okay, is that
Should
okay?
we draw like, yeah, but should we draw like this red and blue, let's say sky blue line that you draw here, like
You will spot
20
it.
trade?
You will spot it if possible. Take it on your demo account. Yes, take it on your demo account because you need to be practicing. And if you take them on your demo account, I want to see the results in the assignment chat. I want to see results. So it will not be as if I'm teaching you and you're not practicing because you have to practice it. If you don't practice it, if you don't train your eyes to see AMS, you won't be able to make money from it. If you look at this one now, this one now was supposed to be up because me, I scalp, especially if it's against now. This is against the trend, so I don't hold it for long. Look at this AMS here. It came back to B and what? So now this trade I was supposed to be up with the amount of position I was going to enter. I was supposed to be up about $80. Yeah, I was supposed to up about $80. This move here, just this move. I mean my target a day is 50 to 100. 50 to 100. So here is a game of compounding. Compound compound 50 times 25 for me. Let's see. Let's see 50 times 25 means what? Who's doing the maths?
Sorry, 50 times 25, right?
Yeah,
Yeah, it's 1,000. So it's 1,250.
thank you very much. So with just spotting AMS, you made 1,250 right in a month. So it's as simple as that. So you do the assignment, 5 buys and 5 sells for me. Okay.
Okay, sir.
Okay.
All right. So
So, so first we have to draw our key levels, right? Before doing that.
yes, you just have to have your key levels. Although I'm not asking you to draw key levels in this assignment. So a key level doesn't have to be shown. Just find 5 AMS for me, 5 buys and then 5 sells, total of 10.
Yeah, the second class we had was on what? Sorry, because I think it is the second class structure that we had for this class.
Yeah, the second class we had was trend and market structure, and I taught you only the basic market structure.
Yeah, yeah,
Now
yeah, yeah.
a lot of knowledge, but what you have to be able to what control it and then what use it to your profits.
Advantage.
So you know all these things. Then when you enter the market, you are seeing is oh, this is BMS. Oh, this is an AMS. How am I going to profit off these things? So in subsequent class, we are still going to look at what this is just a type A. There are still more things to learn. That's why I say don't miss class, don't miss class. Because even though I drop the videos, there's nothing as good as what being in class yourself. So you see, where you can ask questions. So I'm still going to drop the video. So in our
So,
next class,
so, like,
okay,
so can you draw like a basic market structure on that chart that you just have right now? I
this
mean, on
one.
this chart. Yeah.
All right, so
Okay.
let's
So
see.
yeah.
Let's see a basic market structure. Okay, so this is a basic market structure. This is an example of basic market structure. So you can see it up, down, up, down, up.
Up.
So you see it. But then with AMS, you can what? Get better market entries, sniper entries, smaller stop losses, and higher risks to reward.
Higher risks.
Higher risks to reward. Higher risks to reward
Okay.
is mean like, okay, let's say this is a 1:6. But if you had used, let's say, okay, let's say this was, where's all that previous buy? I think it is this one. What was our last buy? Oh, can't even see it. Mm, okay, I think it was this one. This one here. Yeah, this one. Alright, so let's say if you had used basic market structure and taken it on a higher time frame, maybe your risk to reward would have been 1:3. But if you had gone on a lower time frame to look for sniper entries, probably your risk to reward would be something like 1:6, 1:8, 1:9, even up to 1:10. So you can see, you can profit more. So don't worry, I'm going to teach you risks to reward. You're going to learn all these things. It's small. But I want to be clear that you understand the type A of the AMS, right? Hello,
Yeah, I'm
Yeah,
here.
understood.
you understand? Okay, so you have an assignment, 5 buys and 5 sells. I'll be expecting them on or before Wednesday. And any AMS
Okay,
you
sir.
see, please take the trade.
Okay.
Don't just see it and draw it. When you see it, mark it, you take the trade. Even if you hit stop loss, no problem. I'm still going to teach you why you hit stop loss. Because it doesn't just stop at spotting AMS. There are other things you need to learn. That's why we need to what? Hasten up. There's no time. By now, you're supposed to be trading your own account too, a real account. So you do the assignment and you submit it, and then I'll look at what you've submitted, and then I'll do correct the mistakes, and in our next class we are going to throw more light on the type A, and then we are going to look at what the type B of AMS looks like. Is that okay?
Sure,
Yes,
sure.
sir.
All right, perfect. So do have a good night and please be on time. I'm going to drop the recording in the group later.
So like I have this demo account of $41 for
You have
90.
a
Will you be
demo
able to
account.
like, yeah, but it's on synthetic.
A demo account in synthetic, $41.
Yeah. Will that be
A demo,
that
a
won't
real
crash?
account.
No, we can't. See, it's a demo account that I upload onto that account.
Okay, you blow it up to $40.
Yeah, up to $41, yeah.
Oh, perfect. So you can use it because um you can't fund $10,000 currently the way the rate is giving you $10,000 demo account. So I always tell my
Yeah.
students, okay, you want to trade the rate, blow that 10,000 to about what you can fund. Let's say $40, $30, $20, and use it to practice. Mhm. So you can even use currency. You can even use currency and practice, fund a demo currency. So create a demo account in currency. So, okay, this is what we are going to do. These 5 buys and sell, I want you to spot it on both currency and synthetic. So that means it is making it 20 now. So the assignment just went up.
But like the price I have in my synthetic is just boom, crash,
No,
jump 10,
do you
jump
have do
25.
you have do you have um the trading view for the reef? I'm
No.
going I'm going to send you trading view for the reef. So make sure, I know you may not be able to save your drawing. So whenever you take a drawing, either you leave your system on or you quickly take the screenshot and send to me, and it's your chart. You should be able to mark it over and over again, even if it cleans. So, or let's just do, or let's just, or any one of your choice, either currency or synthetic. So 5 by 5 cell, let's just do it like that. So it won't be difficult for me.
Yeah, I mean the pairs I have in my synthetic are boom and crash, then jump and
Add
others.
volatility. Add volatility. Volatility is what we use to grow small accounts. The boom and crash, why I don't trade boom and crash, I'm not discouraging you. It's
No, no,
by
no, sure.
preference. Boom and crash is expensive. You can't use a $10 account to grow with to grow it with, it's possible though, but it's not going to be easy the way you're going to do it with volatility VIX. It's easier on volatility, taking a $10 to even $100. So it's easier on volatility, but it's more risky and expensive with boom and crash. So that's why I focus more on volatility. And because I know a lot of people that take this trade, they don't have much in their account. So I don't come and start giving them trades whereby before trade has not even gone half to where it is, where stop loss is, an account has already blown. So that's why I focus more on volatility.
Okay.
Perfect, perfect. So in absence of any question, we are going
And I
to
see your
jump.
volatility and I see your volatility like using 25 and
Exactly,
75.
exactly, because
Then
those are the sweetest, 25 and 75.